The American dream has a price tag. For decades, we've been told the story: go to college, buy a home, drive a nice car, and use credit to bridge the gaps. But if you look closely at the gears of the U.S. economy, you'll realize something disturbing. The system isn't designed to help you build wealth. It's designed to keep you in a state of perpetual payments. In the United States, consumer debt has hit an all-time high of over $17 trillion. This isn't an accident. It's a feature, not a bug. From the way your credit score is calculated to the way your student loans are structured, the economy needs you to be in debt to keep the engine running. If everyone paid off their balances tomorrow, the banking sector would collapse. Today, we are looking at the money logic behind the debt trap. We are going to expose the three major pillars that keep the American middle class broke and how you can opt out of a system that is betting on your failure. Let's start with the most powerful number in your life, your credit score. We're told that a high credit score is a badge of financial health, but have you ever stopped to ask what that score actually measures? It doesn't measure how much wealth you have. It doesn't measure your savings account or your net worth. It measures one thing: how good are you at borrowing money and paying interest? If you have $1 million in the bank but no debt history, your score might be invisible. The system punishes you for being self-sufficient. To have a good score, you must participate in the debt cycle. You are encouraged to open lines of credit you don't need and carry balances that the banks can track. The credit score is essentially a loyalty card for the banking system. It ensures that your first thought when you want something isn't, "How can I save for this?" but "What's the monthly payment?" In the U.S., the trap begins before you even earn your first paycheck. The student loan crisis is perhaps the most efficient debt trap ever created. By encouraging 18-year-olds to sign for $50,000 or $100,000 in non-dischargeable debt, the economy secures its next generation of compliant workers. When you graduate with a massive monthly payment, you can't afford to be a risk taker. You can't easily start a business, you can't travel, and you certainly can't wait for the perfect job. You're forced into the workforce immediately to service the debt. This provides a steady stream of labor for corporations and a steady stream of interest for the government and lenders. It is a modern form of indentured servitude disguised as investment in your future. The U.S. economy is 70% consumer spending. If you stop buying things you don't need, the GDP drops. Therefore, the system uses every psychological trick in the book to ensure you keep spending, even when your wages are stagnant. Inflation acts as a silent tax. As the dollar loses value, your savings become less powerful. The logic the system teaches you is buy now because it will be more expensive tomorrow. This encourages immediate consumption over long-term saving. Coupled with lifestyle creep fueled by social media, Americans are trapped in a cycle of buying depreciating assets, cars, clothes, electronics, on credit. We are trading our future hours of life for temporary objects that will be in a landfill in 5 years. The economy grows, but your net worth stays at zero. For most Americans, their biggest asset is their home. But for the first 15 years of a 30-year mortgage, you aren't really buying a house, you're just paying the bank for the privilege of living there. The 30-year mortgage is the ultimate anchor. It keeps you tied to a specific location and a specific income level. While real estate can be a great investment, the way it is marketed to the masses is as a monthly payment they can barely afford. When you add property taxes, insurance, and maintenance, the American dream of homeownership often becomes a 30-year transfer of wealth from your pocket to the financial sector. So, how do you win a game that is rigged against you? You have to stop playing by their rules. Redefine your credit score. Treat your credit score as a tool, not a lifestyle. Use it to get what you need, but don't let the quest for a perfect score lure you into unnecessary debt. Kill the payment mindset. Stop asking how much a month and start asking what is the total cost. If you can't buy it twice in cash, you can't afford it. Invest in cash-flowing assets. The rich buy things that pay them, stocks, real estate, businesses. The poor buy things that cost them,
cars, gadgets, subscriptions. Shift your money into things the system can't easily tax or take away. Live below your means. In a culture of excess, the most rebellious thing you can do is be content with what you have. The U.S. economy wants you broke because a broke person is a predictable person. A person in debt is a person who has to show up to work on Monday, regardless of how they're treated. Wealth isn't about having a big house or a fast car. Wealth is about options. It's the ability to say no to a job you hate or a situation that doesn't serve you. Here at Money Logic, we believe that true freedom begins when you break the chains of the debt trap. If you're ready to stop being a statistic and start being a strategist, join us. Subscribe to Master Your Money and take back your life. Let's build something.